Arcc Corporation stock, ticker symbol ARCC. This stock is up 4% on the year-to-date chart, underperforming the S&P 500 by half. Looking at the recent earnings report, we see some mixed results, but more on that in a minute. People love ARCC stock because of multiple reasons, and of course one of the main thing being the dividend. And I understand why, with dividend yield at 9.2%, which is a great number. If we look at the past 5 years, we see that Arcc was beaten by the S&P 500, but it was a close call. So could this be the perfect time to buy Arcc stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ARCC do? Arcc Corporation is a United States-based closed-ended specialty finance company. It generates both current income and capital appreciation through debt and equity investments. The company focuses on investing primarily in the US middle market companies, with investments opportunities as well as in larger companies. Diving into the earnings, we see some interesting numbers, with net income per share at $0.76, up from the previous quarter where it was 70.2 cents. Looking at the year-over-year number, it does look really good. EPS is increasing year over year as well, but net investment income per share decreased a little bit. The net asset value per share also increased year over year and also quarter over quarter. Overall, to me, this looks like a great start. In this graph we see the numbers one more time, but now I want to focus on the bottom part of this table. Debt to equity ratio is at 0.99, which is a decent number. The other numbers also look good to me, so this comforts me a lot. And as mentioned earlier, the net income per share is at $0.76 and core EPS is at $0.59. With dividends at $0.48, it does look really good in terms of safety. For me, the diversification is key with these type of companies. The biggest investment is at 8.6%, which is below my 10% maximum. The top 15 represents 29%, which is also fine by me. The asset class and industry diversification also look pretty good to me. I wouldn't mind if healthcare services was a bit smaller. The same goes for software and services. But nothing that worries me a lot here. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. Arcc is a 12 billion market cap company. PE ratio is at 7, indicating they are undervalued. Later in this video I will show you my 3 price targets for Arcc stock, so make sure to watch until the end. Revenue is at 1.83 billion and in this graph we see that revenue went up in the long run. Margins are going up and down a lot. But most recently margins are going up again, which is looking pretty good to me. EPS is pretty much the same story as the revenue and margins. It is growing, which is the positive part here. Analysis expect that EPS is going to decrease from here, which is very interesting. For the revenue analysis expect that in 2024 Arcc will grow almost 6%. But in 2025 they expect revenue to come down a little bit. Return on assets is sitting at 7%, which is a decent number. Return on equity looks really good, and since this is a finance company there's no return on invested capital. Current ratio is at 1.24, which is a great number. It is also pretty steady historically, so this looks good to me. Right now, Arcc Capital has almost 12 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Arcc Capital has 500 million in total cash, so they can't pay down a big chunk of their total debt. To me, this doesn't look good. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is looking really terrible in the past couple of years. There are a few positive numbers here, also the most recent one, but to me this could be a big problem. Shares outstanding are increasing over a longer period of time. I prefer them to go down, but in the case of Arcc it makes sense since they increase shares to raise capital and grow the business. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 9.2%, which is a great number. Annual payout is at $1.92 and payout ratio is at 80%. I prefer 50% or lower, so right now they have only 20% left in cash to buy back shares, pay down debt, do acquisitions and all other things. But it has to be said that for companies like Arcc it is very common to have a higher payout ratio given their dividend yield. And now it gets really interesting. The 5-year growth rate is at 4%, which is a decent number. And they have increased the dividends for 3 years in a row, which is very nice. If you take a look at these numbers, the dividends paid since 2012, you see that Arcc Capital did increase the dividends at a decent pace historically. But in 2020 they decreased the dividends due to lockdown periods. From there they started increasing them again. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked pretty good. It is coming down, which is the thing I like the most here. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to stay flat from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare Arcc stock with the overall market, in this case the S&P 500. Next to that I added OBDC and Main. On the 5-year chart we see that Arcc stock was beaten by the S&P 500 big time. In total, Arcc Capital returned 89%, and keep in mind this is including dividends. The S&P 500 is sitting at 95% return. Main Street also came really close with 87, and Blue Owl Capital is sitting at 71%. On the 1-year chart we see that things are changing drastically, with 45% return for Blue Owl Capital and almost 35% for Main Street. Arcc had the lowest return with 24%, and the S&P 500 is sitting at 27%. On the 6-month chart it is again Arcc Capital with the lowest return, and this time Main Street has the highest and Blue Owl is second. On the 1-month chart it is finally Arcc that is beating the S&P 500, but again both OBDC and Main had a higher return here. Bottom line, Arcc Capital was beaten by the S&P 500 in the long run and in the short run. But could this be the perfect time to buy Arcc stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 88, 90 and 92. For the free cash flow margin I'm putting in 10, 12 and 14. For the P/E ratio I'm putting in 6, 7 and 8. For the price of free cash flow I'm putting in higher numbers. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now Arcc Capital stock is at $20.8. I hit analyze and we see a few green numbers. And I'm more focusing on multiple earnings of value. We have a low price target of $21, we have a mid price target of $25.7 and we have a high price target of $31. To me the mid price target is the most justified here, telling me that this stock is undervalued based on this number. Which price target do you think is most justified? Let me know in the comments down below. My final conclusion on Arcc Capital is that it is a high risk and potentially a high reward company. There is no denial in dividends being awesome. Looking at the fundamentals you are going to find a few problems such as debt and free cash flow. But other than that it looks really good to me. As said a second ago, dividends are amazing and that is how I look at this company, a pure dividend income play. I'm planning to open a small position anytime soon. For me, it is the same strategy that I have with ABR, another high risk, high reward stock. Keep them under 5% of my total portfolio. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.